Okay, so tonight we are going to talk about how to make money in Auckland apartments, especially in today's market, in this rising market. Before going in that thing, what I would like to bring from our first night, which happened in November, and a few people joined us that time. The one statement that I would like to bring up is, which is pretty scary if you think about it more closely, but the statement says that only 3 people out of 100 in New Zealand retire financially independent by the age of 65. It's only 3 people. If you think about it, you pretty much got the same odds as you would go and gamble in a casino. You've got 1 to 33 people who would, by the age of 65, retire and live the life stress-free and financially independent. I guess most of us here, guys, who joined that invest night in property market think that real estate is the best vehicle to become wealthy. And I personally share the same opinion. But before going there, let's look at those numbers, think about it. New Zealand is one of the very developed countries. Me coming from Russia and Kazakhstan, from developing country, this is very scary facts, you know, that there's only 3 people out of 100. What people do differently? Why in such a good developed country where the minimum wages are so high they can afford to pay so much, why they can't get financially independent when they retire by the age of 65? Is it something with mindset, or people don't spend money wisely? To answer this question, let's think about how we spend our money and how we invest our money, and do we invest our money smart and wisely. And I think real estate is one of those industries where you're not only building your wealth, but you're also building your passive income. So if tomorrow you decide to not to work or retire, you've got your portfolio that's looking after you financially, and that you can go to sleep tomorrow and think that if I don't go to work, I've got something coming in my pocket. But in this market now, it's becoming more difficult to find good properties that will not only stack up, but also will be good for all of us. But you know, looking at the Auckland apartments and with all that talk that's going on, I personally think, and I guess we share the same opinion in our sales team, that apartments are still the good real estate. We can find properties that will be cash flow positive. You know, being the best, well, I would say the best, I think so, and the biggest property management company in the city, we list and we deal with a lot of buyers and I guess a lot of vendors as well who are looking for cash flow positive property. And I think apartments at the moment are, I mean, it's arguably, if you're looking for a good property that doesn't have any issues, that doesn't have any problems, that could cover not only your mortgage, but it's got a bit of a surplus and rental income. The prices go up not only by months or weeks. You can see such a great activity going on with us, and as well as some other real estate companies, where the prices rise on a daily basis. How can we buy well? What do we need to do? What are the common ways of buying it? And I guess very basic answer to it is, you know, a lot of people are in today's, you know, nowadays on real estate, on Trade Me, checking out those new listings is coming up on a daily basis. Some people go a bit further, trying to build up some sort of relationship with agents, trying to get a first preview, you know, glance before it goes publicly available online on those websites. Some people trying to sort of go directly to the vendors and get a private sale. Those are all good ways, but it's still becoming very hard, especially with all the competition in this boiling market. You've got so-called, say, newbies, those investors who's been here for 5 minutes, they're all trying to jump in, you know, make a bit of money on the way out, and just exit the market. So it's becoming very, very hard to find a deal that will not only be good on the paper, but also a chance to have a good capital appreciation. Before answering that question about what do we need to do to buy well, I would like to get your guys' opinion on today's market. And if I say draw up a clock, and I'd say, and let's say this is a Auckland City market cycle, and 12 o'clock is a peak where 6 is a bottom. Can I get your guys' opinions at what time in this market cycle we're at in, say, today? 9, 10, 11. 9 here. So 1 here, 1 here. Any other opinions? What do you guys think?
Commentators would have you believe we're still at about 6 o'clock then.
At 6? Some people think we're at 6. But I mean, looking at the Auckland apartments, I think we're quite. I mean, the Auckland apartment market in New Zealand, in Auckland itself, is still quite young compared to, some other big cities where.
Sydney.
Oh, Sydney, yeah, the closest one, say Sydney. So, I think it's still quite a bit of a way to go. But the reason why I brought up this clock is, and going back to the answer of how to buy well in this rising market. When some people refer it to seller's market, when the vendors on one side, they've got their certain expectations on price and they want to stick to it, and it's getting harder and harder where the rents didn't catch up so much to the value, well not the value, say the prices rather of apartments, and it's getting a bit harder and harder. I'm not even talking about houses where you wouldn't find anything even closer to 5% these days. So when we've been thinking with our sales team and say going back to the apartment in Auckland City, I think it's not 100% correct to put that one umbrella and say we are at 10 o'clock in Auckland City apartments. The way we wanted to do it is divide different buildings and join them up and put them in a certain time. So let's say we've got, I don't know, what is that, 100 apartments, 100 buildings in the city, and we'll say 10 of those are sitting at 10 o'clock, where you've got 5 of them who are still down at 6. And I'll come back to those ones who are at 6 o'clock, and I think that's the ones where we've got a great opportunity for you guys to invest. And I wanna talk about a bit of a, I would say not leaky, but that's been well known these days, even though a lot of people don't realize when it says leaky, but let's call them leaky as broken buildings. These buildings are a great opportunity for a lot of investors like you to buy them here. I guess, on one side, the drawback is the banks don't want to hear about them, but that's the opportunity. And I guess all of you guys got a few properties now, so you've built up some sort of equity, and based on that equity, you can buy anything tomorrow. And I think buying something that it's, when I said broken, I mean if you do your own research, and if you don't have time to do your own research, I would say promote here, myself and the sales team, we do that full time. We manage over 1,500 apartments in the city. We know most of the buildings. We've got inside knowledge. We've got some relationship with building managers, with body corporate. And, we could give you a good, knowledgeable reason to buy something at 6 o'clock. If an apartment that is broken, well, say let's call it broken, but, the body corporate are very efficient. They already collected all the special levies. They applied through the council to get, building consent. Everything is on the paper. we're looking at the time frames up to 18 months. But in today's rising market, that's a huge opportunity. Buying something that is worth today $350, you could buy it at $200,000 in today's market. And if it's going to carry on as is, at the time when it's finished, you could be looking close to 400 plus. Yes, you may have some sort of opportunity cost and lose on rental income. And in most of the cases, what we've noticed in some apartments that's gone through those remedial works, you still get rent. Buying at 200,000, the current market rent could be, well, let's say an apartment that is worth, in a good building, that is worth 350, you could rent it for 420. But if you buy it for 200,000, okay, because of all the inconveniences and say excessive noise and all those scaffolding and that, you get $100 discount in rent. But it still covers your, say, interest, your outgoings like body corporate and levies. And you've got to wait for that time. Everything is underway. Yes, you may pay a bit more extra special levies, but at the time when it's finished, when you've done your research and you think it's worth investing in certain apartments like that, you could be sitting on a, how you guys call it here in New Zealand, gold mine. So I guess I jumped a bit further, but what I want to say is, it's, when you said about timing, I think most of you guys agree with that, but I think it's slightly misleading to say Auckland City apartments and put them at a certain time of say 10, 11, 9 o'clock, something. Maybe the best way here is to actually find up to 10 buildings that you know very well, you've done your research, and you can say, well, there's a few apartments sitting here, but there's a couple of other ones that will be a bit still on that side, where you could not only enjoy the appreciation but also get a good rent. And once it's finished, you'll be sitting closer to like 10% net. Would you find in Auckland? I don't think so. So it's all about, yes, it's all about getting better equity or get some cash. And I'm sure that with most of you, well, I think all of you who's got some sort of portfolio build up now, you've got a great buying power that you can go tomorrow and say, I want to buy this apartment. And who cares if it's broken or not? It's still a good investment. The other thing that what I would like to say, I guess, that comes down to renovations. That's something that some people found a very good way of buying something that is, say, under-rented, that hasn't been well managed. That's another way. The way we look at it, we sometimes sell those apartments when the vendors are a bit greedy. They don't want to spend money sort of keeping their apartments up to standard, and because of that, you don't get the best tenant. That's why you don't get the good rent, and that's another way of finding. And being with us again as a sales team, we, most of you guys been dealing with me or one of my colleagues, and we've built up some sort of relationship so far that, and I hope some sort of trust that, tomorrow if you say, Ali, I want something within that budget and closer to a certain return, and if tomorrow I can say to you, well, would you be interested in something maybe at 7 o'clock, but it's not the best building, you can still do your own due diligence, and you can still get your lawyer to check things. But if it works fine, there's a good example, what I have to tell you, that's what I want to bring up. It was a building that got fixed 2 years ago, Argent Hall, 2 Eden Crescent. I remember it was end of 2010, they were about to finish, and then mid-2014 they just got a new code of compliance. So I just started, and I remember those times when I'm looking at that one-bedroom apartment, 45 square meters, at that time was worth 300,000, and you could buy them at 190. I just put a number so it's a bit easier for you guys to understand. So it's 45 square meter, one bedroom, broken building. Well, building is going through some remedial work. At that time, the market price for that was, say, 300,000. And you could buy those apartments for 190 at that time. There was a lot of the stressed owners and people who's gone through so much, headaches and nightmares that thought, we just want to get rid of it, find me a buyer, And I remember it was at that time when I wanted to get onto a ladder first, and I was thinking, oh, I could buy an apartment for under 200,000. You know, I was thinking about it, but I didn't know any. Well, I was getting into it that the banks wouldn't like at that time, but I thought I have that in mind. So I need 20%, so I could buy something under 200. So on the first day, when you've got a new code of compliance, you know, the apartment's gone up close to 300,000. I said, well, now I've got to save a bit more, you know. But a lot of people, what they've done is they've done their homework. They get their lawyers to check it. They asked us. We knew the building managers. We knew the body corporate. We knew a lot of owners who've gone through that, and we had those inside knowledge and knew that this building is about to be fixed. It's just a matter of time. It was just about to, you know, do the final work and then wait for 3 or 4 months to get a, well, up to 6 months, they said at that time, to get a new code of compliance. And what some people did, that's even better. Like, they didn't even risk. They said, okay, I'll buy it at 190, but I would like my settlement to be conditional on new CCC. Right? So he paid 190, he waited until, say, 1st of May or something, and he bought a brand new, pretty much, apartment with new code of compliance at the value, at the future value. So it was on the first day when he got a new code of compliance, the prices jumped up in that building, and I think this apartment at the moment, we've just sold one. So it's another year after that, we've just sold one for 398. So think about it, someone who bought it for 190, at that time it was rented, while they were going through remedial works, they were getting 320 per week. One was fixed, a year after they were getting a 450. I think now it gets 464 already, yeah. Oh, not much, but yeah. I mean, think about it, you would buy something for 190, even if you decide not to sell it and keep it, and you would get, let's say, 470 rent. And if you do it up, spend a bit of money, you know, you could get closer to sort of $500. Is it a good real estate? Well, I think so. So before, the whole point of it is, because of such a huge competition in this rising market, a lot of people, when they say, or when they think about a broken building, leaky building, first answer that comes to their mind, no, I don't want to see it. They haven't even read the minutes, they haven't even know what the history about it. But talk to us. We're here to help. And we can advise you whether it's worth, you know, investing into that or not. And if you look at those numbers, you know, it's definitely something to think about. And there's a few apartments. Sergeant Hall is done up now, and you won't find anything closer to that. But there's a couple of more apartments. There's a few apartments at the moment in the market that you can buy well, really well. Hold on to it. Go through. Yes, there is a certain risk factor involved in it, but it all depends on, you know, how comfortable you are with that. And if you've done your research, or with the help of us and your lawyers, you know, you could be sitting on a very good real estate that will, you know, that will be fully fixed up. And, you know, I sometimes call it a brand new building, you know, because it's just been done up. As I think I mentioned a few times, but I think I want to say it again, us as biggest property management company in city, and with a smaller sales team, we work a bit differently. I think most of you guys know, but I would like to say a couple of words about us. We work in the team. We are not agents that are working, you know, individually. We don't have any conflict of interest, and we're here to look after you. And what I would like to do is, not at 65, but let's say before that, I would like you guys to end it up in that golden 3%. And, you know, tomorrow, when you go to Hawaii, you want to sit somewhere in a nice resort, drinking your glass of wine, and not to worry about anything else, but just enjoy your life with your family. On this note, I've asked one of my good friends that I've met through real estate as well, and her name is Susie Signal. She works at BNZ, and she helped me to step on that ladder, and I'm so grateful that recently she did even a bigger thing. She helped me with buying a house, which is my first house, and has been a big, you know, I'm really grateful So I would like to introduce her, and if Susie, you would give a couple of words about what's say happening in the market and from the banking side.
As Ali says, I've been working for BNZ now for 21 years, and I started property investing in Auckland around about 10 years ago. This year I've taken my first foray into the apartment market, so it's taken me 10 years of investing out there in the suburbs to go, I don't want to know about the apartments, it's too hard, I'm not prepared to do my research. And this year I had a slight twist in my way of thinking, and I've come to the apartment markets with a slightly different hat on. And for me, it's about buying something now that I'm going to give kid 1, kid 2, kid 3 when they hit 25, 25. I want to be able to go, here is your property, don't bother me, off you go. And ironically, the decision that we made when we did that is we said we're going to use our equity. This is what we did. We bought a leaker, which may or may not turn out to be a good investment. And the concept, exactly as Ali says, we've paid $320 for it. The goal is that it'll be worth $400 when it's code compliant. It's listed on Trade Me at the moment for $500 a week if any of you have got a tenant that needs to be moved. So it's cash flow positive now. I'm taking that money, I'm paying it off my own mortgage for the next 10 years. And when my 16-year-old son comes to me at 25 and says, Mum, how do I get into the Auckland property market? Off you go. I want $320, you can take the gain. I've had the income for the last few years. Yeah, here you are, off you go in the world. So it's been a reciprocal win-win. I see my job at the bank is to help people how to move forward. I think the biggest opportunity loss is that people don't act. And I think if you're prepared to give something a go, you'll win. It's the inaction that I think costs people money. Interest rates yield, I jotted that down on my list. 4.05 is what the BNZ is lending money at on a 1-year fixed rate at the moment. Just by the way, term deposit 3.7. You know, it's just insane what the banks are lending money at. People like, you know, you and I remember double-digit interest, and people say to me, oh, I'm going to take a 3-year fixed rate at, you know, I'm going to fix for 5 years because I don't ever want to go back to those double-digit inflation figures again. I don't think they're coming. I think you have to actually be ballsy and just be greedy and take the lowest fixed rate on offer and deal with the repercussions when that rolls around. Frankly, I think you're going to get a lower rate in a year's time than you will now. The stuff that I'm reading from the economists is there's quite a bit broken in the world and quite a bit broken in New Zealand. There is nothing that is threatening high interest rates anytime soon. And so for me, my strategy is to be greedy, take the lowest rate on offer and deal with the consequences when it falls out. My feeling is that I'll be fixing for 1 year, for 1 year cycles, and 1 year cycles, and 1 year cycles, probably for the next 5 years. Halo effect, touched on it before. Hamilton, Tauranga, you know, for me and my goals, it's about where am I going to be in year 5, in year 10, in year 15, in year 20. I'm not a speculative investor. I don't want to know that in 12 months' time when I looked back, the best place to buy this year was Hamilton or Tauranga. I want to know where is my wealth going to grow to in year 5, in year 10, in year 20, and for me that's Auckland. And it's Auckland for a number of reasons. As I said before, this is where the migrants want to come and live. They like the climate, they like the buzz of the city. Auckland is big, growing bigger. None of the other cities in New Zealand have that potential like Auckland does. KiwiSaver's a really biggie. The New Zealand KiwiSaver market is now starting to mature. People are starting to be able to get their KiwiSaver deposits out. There was a cap in Auckland of 575,000. So me and my, my partner, if we've been in KiwiSaver for 5 years and we've never owned a property before, the government's going to give me 10 grand if I can find a property in Auckland under 575,000. Where is that property? Yeah. You know, you're either in absolute outer extremities of Auckland, and how long does it take you to come into work, or you buy in Auckland. And the banks are now absolutely going 80% owner occupied, and some, not BNZ, some are going higher than that again, low equity. I think it's coming. I think the BNZ will go to 85-90% on certain apartments And the only way that those KiwiSaver people can really benefit is buying into that. And I just want to touch briefly on trends. Who remembers the spiel that the New Zealand, the world property market was going to crash because of these things called baby boomers? So, there's this massive glut of the population, baby boomers. They all own a house of 180 square metres. They're out there in the suburbs, and there's going to become a time in the future where they all want to leave their big family homes and move into smaller retirement type homes. And so there's going to be this glut of property that comes onto the market. Did you already remember that spiel? Where is this glut of property that's coming onto the market? It hasn't happened.
They're all buying up large, aren't they?
Absolutely, and so
using the equity.
You have to take action. You have to have faith. You have to do your homework, but you are not going to get a return off a term deposit. You have to take a punt, and for me, that's probably trusted advisors is key. You've got to trust who you're dealing with in terms of purchasing agent.
And it's everywhere. Agents, bankers, financial advisors, lawyers, it's all going to that. You're not here for one day, and you all want to create a good team around you. So tomorrow, if you want to go and buy something, you know who to call.
Thanks, Ali.
Thank you.
I moved up from Wellington maybe 7 years ago and started looking at the property market. About 4 years ago, I thought there's a good opportunity in buying apartments. I came to Mark and we found a full apartment up for sale. If I remember right, I came and saw Mark. I'd done my sums, done my homework. You try to buy on your own terms that work for you. I said to Mark, I'm not prepared to pay more than $2,000 or $5,000. And Mark said, sorry, the vendor is not going to accept anything less than $210,000. So I said to Mark, well, that's good, but can you just please take an offer to her at $205,000? Well, within 5 minutes, Mark was back to say the offer was accepted. So Impressions do have some great salespeople. I do all my property management through Impression. They provide me an excellent service, and I know their sales team are fantastic as well. So I've had a very good run with Impressions, and I come and talk to them. But if you're buying apartments for investment, just do your sums, have your criteria. I bought all my apartments, I hold more than 12 apartments. They all had positive cash flow when I purchased. That was one of my criteria. Since then, the market's taken off, as you know, and the values have gone up horrendously, and the rentals have also gone up. And with Impressions property management, they are very aware to ensure the rental price moves up with the market for the properties you own. So you know you're going to get probably the best rent you can with Impressions property management. That's what I can say really. Ali's a nice guy too.